Okay, hello everyone. So this is going to be a analysis on EOS and the US dollar pair. Okay, I know this might look a little bit uh, daunting at first, but I'm gonna walk through how I got all this again. Okay, so all in all, let me tell you guys the conclusion first. The conclusion is we can either short from here to here. This is the target. The green boxes here are the targets. We look to buy here. We're going to buy some over here in the first green box. We're going to buy some over here. All right? Okay, now let's start again by starting from here. So the whole idea is based on the whole idea is based on my opinion that we have finished 5 impulse waves to the upside, and we are now in an ABC correction. And the zone, our buy zone, would be formed by the the end of wave C, right? Because that would mean the corrective pattern is finished and we can potentially continue to the upside, right? Okay, now let's start by counting the waves of the upside. Okay, I'm gonna hide these. How should I do this? Should I? Sorry about that. Okay, now let me at least delete these. Okay, now if we just look at the EOS price action, let's go to a higher time frame. Yeah, we look at the EOS price action and we don't even look at the waves, right? We don't even look at the waves for now. We can at least draw the peaks, right? So I've drawn a horizontal line on all the peaks that I see. So this should be one peak, right? And that's possibly another peak. And that's another peak, right? This one. You shouldn't label them because now I don't know what waves there are yet. We start by labeling the peaks, right? Now we don't know we have 5 waves. It is my opinion that we have 5 waves, but before even starting to count, we don't know yet, right? So this is how you do it. You just find the peaks and you label them. You label the peaks. In this case, we have quite a clear formation of all the peaks. Let's just ignore the stump. I don't believe we see it on other exchanges, only on Bitfinex. So let's just go with this peak. Okay, now before counting the waves, let's just line up the trends, right? Line up the trends from this peak to starting from here to this peak, right? And we also have an uptrend peak to here. And it gives us a beautiful 5 leg up, right? Again, I have to ask you guys for help again. If any one of you knows how to fix this cursor flashing problem, like I want to click this horizontal line, but you see my cursor is here, but the dash line is way above, which is fucking weird and it's annoying as hell. Okay, anyways, this would be my 3rd leg up, right? So in this case, I would think it would be safe to draw like this, right? 1, 2, 3, 4, 5. Okay, now wave 4 does not retrace into the proximity of wave 1, right? That qualifies, that fits the criteria of a rule of Elliott waves principle. And wave 3 clearly is longer than wave 1, right? Wave 3 over here, the height is clearly longer than wave 1. So this is a set of 5 waves that qualify as, a set of Elliott waves. They fit the rules. Okay, now if we do draw like this, let's look at the Fibonacci retracement of wave 1 and 3, right? Just to see if we find good evidence that this is a nice way of drawing it, right? So My mouse. Jesus Christ. And wait, how do I get those back? How do I get my previous ones back? Do I just have to redraw them? All right, never mind. Okay, now, if we look at the Fibonacci retracement of wave 1 over here, right? Wave 1. Can we see? We can see that wave 2 retraced to 0.32, right? Wave 2 retraced to 0.32. Right? Let's get rid of the border. Okay, right? So let's get rid of this tool just to keep it clean. Actually, let's keep the border, so we know what we're looking at. Okay, so wave 2 retraced to 0.32. Let's look at wave 3. Wave 4? How much does it retrace of wave 3? We see that it overshooted. It went beyond the 0.618, right? But just a little bit, just the wick, just the wick. So we can still say that wave 4 retrace to 0.618, right? Right? Would you guys agree? And even before wave 3 started, right? Let me go back in time. Let's say I go back in time. If we're in early December and we identified that this is the peak, like we wouldn't have known that it had gone up, right? This is the peak that we see. We identified that this was the peak. So how do we know? And this was the other peak. How do we know where wave 3 would go? We can see the 1, 2, 1, 2, 3, 4, 5 here, right? The 5 subwaves of this first leg right here. Now let's just apply the Fibonacci extension tool of wave 1, 2, right? My mouse. God damn it. It's painful. Okay. Let's look at the Fibonacci extension of wave 1, 2. It's in red right now, right? We could probably expect a $10, right? If wave 3 had stopped over here, we go back in time, we would probably expect wave 3 to end here, 618 level, or 1, right? Or even here. So you would probably take some profits here and I would probably take most of my profits here, right? Because I would have seen this candle. I would have thought that the market was getting a little bit more hesitant, right? So I would have taken the profit, and in that case, I would expect not wave 3. Instead, wave 5 might have ended here, right? But instead, the market was extremely bullish, and wave 3 just penetrated this 1.618 level, just overshooted it, right? Nevertheless, wave 4 still retraced to 0.618. Now that wave 3 has passed beyond 1.618, we can assume, not, it's not always true, but we can assume that wave 5 is going to reach at least the 2.618 level, right? Hope you guys agree with me. And in fact, it did. It did overshoot. But just to be safe, after you see this peak and you find the buy zone at the 0.618 retracement, you would have probably taken profit over here, right? Yeah, it's hard, and you can almost never get the perfect sale. Like, you can almost never get the peak, the perfect peak. So you probably just take profit here, right? And you'd be happy with the results. Okay, now scroll back. Now that we're in the present time, assuming that we've finished all 5 waves, let's look at the Fibonacci retracement of the whole leg, right? We start from here, start from this blue line. See, it's on the same y-axis level as where we started counting our first leg of this whole impulse leg. So if we look at how much the ABC correction retraces the whole set of this 5 waves, then we can see you would probably, before this even happened, so right as you identified this as a trend reversal and you think that it's going to go down, you would have drawn a Fibonacci extension tool, right? And you would probably have bought some over here, right? You probably buy a little bit, but probably like 5 to 10%. And if you see that the market at that time is still dropping rapidly and the 0.32 level is showing no support at all, you would probably just sell at a loss because you would expect further correction, right? So you probably sell at a loss, or you probably wouldn't even buy at all. You probably wouldn't even have bought the position at all, right? If at the time the market is showing that 3.32 retracement is not showing any support at all, you might have skipped this completely, right? And go for 0.5 or 0.618. And it touched 0.618 perfectly, right? Almost. Just missed by like literally 10 cents. So you probably lay your order around here and you'd have gotten filled, right? And you would expect another wave up, which was the B wave, and another wave down, right? So you would probably take, just to be safe, you'd probably take half of how much wave A retraced, right? So if you entered a long position here, if you bought the A, you would probably have taken profit. So let's look at the price range. From 5 to A is $10 difference, right? You're probably just gonna take $5 profit, a $5 profit. So you would probably have taken profit right here, right? But it doesn't matter, it's still a great profit. And after that, after you've taken the profit, you would have just waited to let the market play out, and it would have reached this level, and it would have reversed, and you're no longer in the trade, so you can observe the market, right? Now, how do we find the next buy zone because this whole set of 5 waves can make up a giant wave 1, right? Right? This 5 waves can make a giant wave like wave 1, and ABC corrective pattern would make wave 2. So now we're trying to find an opportunity to long for wave 3. Okay. Where will wave 3 go? We don't know. We don't know yet, but we don't care. Let's just find the buy opportunity first, and I will be updating in the future. Okay. Now, so I've came up with 2 buy zones for buying the end of wave C. You could also short now, but I wouldn't do it. I would just open a long position, right? Even though this is a tremendous. Wait, I actually might short it because this is such a huge gap and so much room for profit. If I do decide to short it, so I'll see. I'm not sure at the moment. It's going down already, so I want to see if it actually pulls back at a lower time frame. I might enter a short position. But anyways, if we expect a wave C to have a 1-to-1 move as wave A, then we would end up with, this is the price range of wave 5. So the corrective, this is the price range of wave A, right? So if we expect a 1-to-1 move of wave C to wave A, this would hit the 0.786 full leg, the 0.786 retracement level of the whole leg, the whole 1, 2, 3, 4, 5 leg, right? The whole leg of wave 1, right? This is certainly possible. So we will want to lay a lot of orders here because this is a very strong demand zone. So this is a great buy zone. Like, lay a shit ton of orders here. It won't necessarily fill because there's another support level here, because it's not necessarily going to be a 1-to-1 move, right? We might get a double bottom over here, but all in all, we still retest the 0.618 level. So I think I'm pretty confident that it will drop to this level at least to retest the support zone. So you can probably build about 30% of how much you plan to buy and buy the rest over here. So yeah, I hope you guys take this trade. It is rather rather safe, I would say, because the chart patterns are pretty persuasive. At least now that I look at it. Okay, now let's give you guys some risk to reward ratio. I don't think a stop loss is needed in this case unless you go short. So let's just go for long because most of you guys following probably are not even proficient in shorting. So let's just sorry about that. Let's just look at the possibility of a long position, right? So let's just be conservative. If we don't even reach 0.786 and we get our buy zone over here, if we fill our orders over here, our stop loss would be somewhere around here, right? This peak. Let's see if this peak, wave 2 here, would serve as a support, right? So let's draw a horizontal line there. This is going to be our support, right? If it drops below, well, we're in big trouble because I don't think it'll ever happen. If we open it here and we drop to here, we'll buy more, right? But, okay, so let's just draw two tools, right? I don't see any reason why it would drop below that. If we do drop below this level, this horizontal line that I drew, we're in big trouble, and it probably won't recover for a while because that would reach beyond the 0.786 retracement level, which doesn't happen that often at all. Okay, so if we retrace back to point here and we buy, we can at least aim for target of previous high, right? We don't, just to be extremely conservative, we can at least aim for here. That would give you a 300% profit, whopping 300% profit, right? And even if you open it here and close it here, it will still give you a 150% profit. So the risk to reward ratio in either cases are both, this should be it, right? But if you bought here and here, the base price you get is probably around here, right? So this is going to be a risk to reward ratio of 17.95. This is a extremely profitable trade. I do not know why anyone wouldn't take it. So yeah, I hope you guys lay your orders at these levels, of these two green boxes. This one wouldn't get filled. There's a possibility that this one won't get filled, but if it does, woo, we are going to have some filthy return. So good luck, guys, and make sure you give me a follow on steemit and tradingview on YouTube. And I don't know where I'll be posting or updating most often, but definitely do follow and share the ideas. Thank you, guys.